Okay, welcome back. So now we're going to do the last part of this 1999 farm accounts question, and the last part is to prepare a general profit and loss account for the year ended 31st of the 12th, 98. Now the general profit and loss account is very similar to the enterprise analysis accounts in that we will be showing income and expenditure, subtracting the expenditure from the income to get the profit. But this must include all parts of the farm. So it's not just for cattle and milk or just for sheep. It's for cattle and milk, sheep, and all other parts of the farm together. So it's for everything in the farm. So we started with, I've already written out the heading, general profit and loss account. And now I'm going to just put in the subheading for income. And because we've already prepared the enterprise analysis accounts for cattle and milk and sheep, we can cheat a little bit. We don't have to put in all of the income for cattle and milk and sheep again and all the expenditure for cattle and milk and sheep. What we can do is just, if there was a profit in either of those areas, we can put that profit in as income, and that takes care of all of the income and the expenditure. We don't have to put in anything else. Or if there had been a loss, then we will put it down in the expenditure part. In the case of both the cattle and milk and the sheep, there were profits. Now, the profit on cattle and milk and profit on sheep. Again, we'll have two columns, so I'm just going to have one here and one here. And we can see we have from the last account, this is the sheep account, profit was 15,230. And the profit from the cattle and milk account was 19,380. Okay, so that's it. So then we go back to our lodgements and payments account again, and for income we look down through the lodgements, and again if we go through all the lodgements we can ignore anything that has to do with cattle, milk or sheep. So you can see we've got milk, sheep, cattle, lambs, calves, ewe premium, wool even, beef premium, forestry premium. We didn't include that last time, so that's certainly some income that is that should be going into this account. So forestry premium 1800, and that's just a grant for having forestry on your farm. Okay, and the last thing then is the 6 months interest from 8% investment, 800, and certainly that is income as well, or at least we'll regard it as income. However, because as we mentioned before, the accruals concept or the matching concept, we have to put in the amount of interest that you should be, or that the farmer should be earning in the year, not just what was received. So if that's 6 months interest, 800, then they should be getting 1,600 euros interest in the year, and that's the amount that we put in. So 1,600 investment interest. And that's it for our income. We just have to tot that up. I'm going to pause for a second to tot it up. So there, that came to 38,010, and I just put in the heading for expenditure here as well. So we'll start with our expenditure, and again, we'll have a look down through this right-hand side, ignoring anything that we've already included in cattle and milk or sheep. But first of all, before we do, maybe we'll have a look at one item down here where it says other expenses, and that means all other expenses besides general farm, fertilizer and veterinary, are to be apportioned 80% to farm and 20% to household. That means because the farmer lives in the farmhouse, for instance, if they get an electricity bill, well, some of that electricity was used by the farm for farm work, but some of it was used also just by the farmer for personal items like watching television or charging their electric shaver or something like that. So we're only going to put in any costs that the farm incurred, not that the household incurred. So when we come to a cost, any other cost which isn't the ones up here, we are going to get 80% of it, and that's what we're going to include in our expenditure. So going back up here again then, fertilizer we dealt with, sheep we dealt with, dairy wages dealt with, cattle dealt with, general farm expenses dealt with, light heat and fuel, that's our first item that we're going to include. So, light heat and fuel, and I'm keeping it quite small here because we've quite a bit of work to do excuse me, on it, because the headline amount here is 3,350. I'm going to put another bracket there, 3,350. But we must also look at what the start of the year, the assets and liabilities at the start of the year, and the assets and liabilities at the end of the year. So the idea is that you must only include the light heat and fuel that you used during this year. Regardless of what you paid this year, it's what you used this year that you should include. And what you should be paying for what you used is what goes in, the amount that goes in. So for instance, if we had electricity due $350 at the start of the year, that means you had a bill for electricity at the start of the year, which presumably that electricity you used last year, or the farmer used last year. So we don't want to include that in our accounts. But if this is the amount, this 3,350 is the amount of money that was paid out during the year, well, we assume that during the year this bill was paid that was owing at the start of the year. So that 350 is included in this 3,350, but we don't want it to be because it's for something that we used last year. It's for electricity we used last year. So the first thing we're going to do is subtract that 350. The next thing we'll notice from the start of the year is that you had fuel at the start of the year of 700 euros worth or pounds worth. If you had that fuel at the start of the year, presumably you paid for it, or the farmer paid for it last year, so it's not been included in this money that was paid out this year. However, that fuel that was there at the start of the year, we presume that it's going to be used during this year, so it should be included, or we want it to be included, so we're going to add on 700 to what we have already here. And finally, at the end here, it says there's a stock of fuel 550. So there's some fuel left over at the end of the year. So we presume that you used all of this stock of fuel at the start of the year, the first few months of the year, and then you had to go and buy more. And this is the money you spent buying more fuel and bits and pieces for your light heat and fuel. But at the end of the year, you had this much left over, this 550. Well, if you have it left over at the end of the year, it means you're not going to use it during this year that's just gone by. You're going to use it the following year, but it's already included in this. So what we're going to do is subtract that 550 also, because we don't want it to be included, because we only want to include stuff that we're using this year. Minus 550. So that'll get us the correct figure for light heat and fuel used this year, and then what we want to do is get 80% of that. Now, it's going to be very tight here. I might have to move my figures over a small bit. I'm going to pause and calculate that. And that came to 2,520. 2,520. So our next item, let's see. We had light heat and fuel. Drawings, no, that's not an expense as such of the farm. Repairs, that certainly is an expense of the farm. 6,100. Repairs. 6,100, and that's a straightforward get 80% of it, and if I get 80% of that, that comes to 4,880. Okay, next item then, vets fees we already dealt with. The loan and the loan interest, well, we don't put loan payments, repayments in here, but we do put in payments of interest as an expense in a profit and loss account. So the thing is, though, we only want the expense for this year, and some of these interest payments were owed from before this year. For last year, they just had mounted up and hadn't been paid, so they were still owing midway through this year, or on the 31st of the 3rd, when we paid these 15 months interest. But all we're interested in is how many of those 15 months were actually months of interest that were incurred during 1998. Well, as we saw when we were doing the very first part, if we worked our way back 3 months to the start of the year, we worked out that 12 of these 15 months were owing from last year. So that means the other 3 months are for this year. So if we did our little calculation here again, where we worked it out at the very beginning of the question, we worked that out that 1,500 was the total amount of the 15 months of interest. So if we divide by 15, we get 1 month's interest, and if we multiply by 3, we get 3 months interest. So 300 is 3 months interest. However, if I put it here, loan interest, $300, we still need to apportion that 80% to the farm and 20% to the household. So getting 80% of that gives me €240. So that's all of the items that we can take from here, but there is an additional item down along here that we'll see, and it's in part 5, depreciation to be provided on machinery at a rate of 20% of cost per annum. So the machinery, we should always really look, I suppose, to our lodgements and payments to see if we bought or sold any machinery during the year. We haven't, by the looks of this. So the only machinery we had at the end of the year is the same machinery that we had at the start of the year. It's this 50,000. So if we write here depreciation, machinery, and it's 50,000. And we said we depreciate machinery at a rate of 20% of cost per annum, so we get 20% of that. But then also we must get 80% of whatever that 20% is, because we're apportioning 80% to the farm and 20% to the household. So again, if we do that, 20% of 50,000 is 10,000, and 80% of 10,000 is 8,000. But we could just stick that all into the calculator and get the solution. And that's it. I'm going to pause again for a second to tot up those figures. So totting up these 4 expenses comes to 15,640, and I put a bracket around it because we must subtract this from our total income of 38,010. And if we do that, we get an amount which is 22,370, and that we call our net profit.